What jurisdictions have you worked with for clients who are looking to protect their money from lawsuits and setting up offshore trust?
Well, we have experience with Cook Islands, we have experience with Nevis, we also have experience with domestic jurisdictions. So for us, essentially, it's more important that we understand what the structure is and that we know the person who introduced the client to us.
I'm here today with Jamie from WHVP. Jamie is a Swiss investment advisor that my firm has been working with for many years. Jamie, thanks so much for joining us.
Thank you very much for having me, Blake.
So let's jump right in. Big question. Is it true that Americans cannot open a Swiss bank account?
It is not.
Why do people think that?
It's a long history, probably the tax dispute that happened about 15 years ago between the US and Switzerland, but it is absolutely possible to open up a bank account if you're a US citizen or a US resident. You just have to make sure that you do it with someone who understands what they're doing and has the proper licensing.
Okay. Can a US person open an account directly? Can they open one through an offshore trust?
Both of that is possible, actually. You can do an offshore trust, domestic trust, LLC, foundation. You can have it in your own name jointly with a spouse or family member. So you really have a lot of options. It's even possible to move a self-directed individual retirement account offshore without it becoming a taxable event.
So if somebody wants to open up a Swiss account, and whether they're doing it individually or through an offshore trust, such as a Cook Islands trust, how much money do they need in order to open up an account?
The minimum is $500,000. For fee efficiency reasons, we recommend starting with $800,000 to $1 million, but it's much more affordable than most people think.
And can a U.S. person invest in U.S. equities, or are they only going to be able to hold cash in Swiss franc, for example?
No, you're absolutely able and allowed to invest in essentially almost whatever you want. So you can go into U.S. equities, but you can also do Swiss stocks, you can do cryptocurrencies, bonds, precious metals, essentially whatever you like.
Is crypto an option?
It is an option, yes. So our firm is focused on capital preservation. For most clients that we work together with, it is not the first thing that they seek. But if someone understands the risks and wants to have cryptocurrency, they can do that essentially in a self-directed way.
So let's talk a little bit more about, in terms of accounts being open for U.S. individuals who are seeking asset protection. What jurisdictions have you worked with for clients who are looking to protect their money from lawsuits and setting up offshore trust?
Well, we have experience with Cook Islands, we have experience with Nevis, we also have experience with domestic jurisdictions. So for us, essentially, the jurisdiction is not that important. It's more important that we understand what the structure is and that we know the person who introduced the client to us.
Well, for our viewers, jurisdiction is very important. And if you live in the U.S. and you want to protect your assets from the U.S. court, we definitely recommend that you look offshore and go with one of the other jurisdictions Jamie mentioned, such as Nevis or Cook Islands. Belize is also a very popular jurisdiction for setting up an offshore trust. Talk to me a little bit about your firm, Jamie. How long has WHVP been around? What type of clients do you work with?
Yeah, absolutely. So the company is currently run by my husband and myself in the second generation. So it's a family business that was started in 1991 by my father. And for almost 35 years, we have been in the business of helping U.S. clients move money to Switzerland. So as an SEC registered investment advisor, we don't hold a banking license ourselves. We work together with reputable private banks in Switzerland and Liechtenstein that do the custody for the assets of our clients, while we have a typically discretionary asset management mandate, so we can invest the money according to your preferences and wishes. Most clients seek to internationally diversify and want to focus on safe haven currencies like the Swiss franc or international stocks, but as we mentioned before, it's also possible to keep on investing in the US markets or even cryptocurrencies if that's what you like.
So Swiss banks are famous for privacy or numbered accounts. Can you speak at all to this concept of privacy with Swiss banking?
Yeah, absolutely. I mean, the bank secrecy law of 1934 is still in place. So with a Swiss bank account, you really get the maximum level of privacy protection. It's important to note that that's not valid towards the IRS. So you'll still have to report your account to the tax authorities and pay your taxes on it. But no noisy family member or neighbor is going to be able to pry any information out of your account.
Now with that, when we open up an account for our clients under a Cook Island Trust, we assist, along with your help, clients in opening up an account in Switzerland. It doesn't mean that their overall tax liability increases, there's simply reporting requirements. And this is for the reason that we give all of our clients a detailed memorandum on how to complete those IRS and FinCEN reporting requirements. So talk to me a little bit more about selecting the right bank. So one advantage of working with a firm like yours is that you're not tied to any one individual bank. If something happens with the management at a bank that makes you uncomfortable, clients' funds can be moved to another bank. You're not loyal to the bank, you're loyal to your clients. How do you go about determining which bank is the right one to work with, and about how many banks do you currently work with your clients?
Yeah, absolutely. I think that's a very important point. We call ourselves an independent wealth manager because we're independent from the bank and also independent from any financial product. So we don't sell anything. The only thing you're going to pay is the asset management fee, which is very straightforward. So in terms of selecting the banks, there's about 240 or so banks in Switzerland. I would say about 10% of them are willing to onboard US clients if they come through an SEC registered investment advisor like ourselves. So that leaves us with about 25 banks as an option, I would say. For us, it's very important to work with a private bank that is ideally still family owned and managed, because we want to have short ways of having decisions made. We want to be able to discuss if we disagree with something, and we want to find solutions quickly. So that's something that we have a very strong focus on. And then, of course, we also look for stable balance sheets, high liquidity coverage ratio, and just general risk aversion. And we currently work with 4 to 5 private banks that meet all our criteria that we like, that have a long track record of working with US clients, that issue good US tax statements, that have solid online platforms, and that meet all other criteria that we have for a bank switches.
And I think a lot of people don't appreciate how beneficial it is to have a family-owned bank, because when it's not a family-owned bank, you end up getting outside investors who may pressure management to start taking risky bets, whereas if a family's the owner, they are much more interested in the long-term generational sustainability of the bank. And with that, you're going to have a safer bank, a better mentality when it comes to who's managing and watching your money.
For sure. We are looking for banks that think in generations and not in quarters.
Great. So talk to me a little bit about fees and timeline. How long does it take to open up a Swiss bank account, and what's it going to cost?
Yeah, absolutely. So I would say a reasonable timeline for an offshore asset protection trust would probably be 4 to 6 weeks. It very much depends on how quick the client is in completing and signing forms. We try our best to walk them through the process. Typically, it starts with an introduction call. So we take about 45 minutes to an hour to just get to know you, see if we would be a good fit, if we can help. And then from that, we determine together which bank would be the best for you. Depending on the volume, it can also be split up onto 2 different banks. And then we will need an initial KYC, so know your customer, initial set of information so we can present your case with the bank. Typically, that's a valid and signed US passport, an intake form that we call investor profile, which is some questions about the financial situation and the family history. We will need a source of funds documentation, so for example, an income statement, a tax statement, something like that. And then we will also need I don't think we need anything else. I think that's it.
I think covered. If someone doesn't have a passport, is it possible to still open up a Swiss bank account?
Typically not. We can look at it on a case-by-case basis. So we are an entrepreneurial company. We want to find solutions, so we will look at it. But typically the banks want to see or need to see a passport.
So one more thing I'd like to cover, dig a little bit deeper into, is the safety of the banks. You listed the reasons why the banks that are on the top of your recommendation list are safe. We focused for a moment there on family-owned businesses, family-owned banks, but tell me a little bit more about what assets are considered on-balance sheet, what are off-balance sheet. Does Switzerland have a similar program to the FDIC, which the United States has? And I get asked this question frequently by prospective clients looking to set up a Cook Islands Trust. My response is, well, sorry to answer the question, to ask is, yes, they do, but far more important than finding a bank that has insurance when it fails is finding a bank that's not going to fail in the first place.
Yes.
Which is, so my question for you is, what are on-balance sheet, what are off-balance sheet assets? What does that mean? And then talk to me a little bit about cash on hand, what a Swiss bank might have in terms of cash on hand versus what a US bank might have.
Yeah, absolutely. I think it's a very valid point to start with picking banks that are extremely unlikely to go bankrupt or run into any problems, and that's why we are so selective with the banks that we work together with. When it comes to FDIC, the equivalent in Switzerland would insure up to 100,000 Swiss francs in cash. That goes for Swiss bank accounts. It also goes for Liechtenstein bank accounts. Now, when it comes to off-balance sheet investments, that's stocks, bonds, and physical precious metals. That's held in your own name or the name of the structure that holds the account. So they will be off the balance sheet. And if the unlikely case of a bank running into financial trouble, you would get that paid out immediately. You would get the 100,000 Swiss francs paid out immediately, and then all exceeding cash will go into bankruptcy proceedings. Doesn't mean it is lost for good. It just means it will take a few years and you might only get a portion of that back. In the 35 years that we have been in business, none of the banks that we have selected have ever come close to any financial problems whatsoever.
And I mean, some very wealthy people will probably have a lot of cash on hand, but I imagine most people, they may want to park the 100,000 Swiss francs, but beyond that, they probably want their money working for them and it's generating some type of return, which also gives them the benefit of, sure, there's market fluctuations they have to worry about, but if something happens to the bank, their stocks or bonds are all off the balance sheet. Thank you very much. So for our viewers who want to learn more about Swiss banking, have you ever wrote a book on the subject? Do you do any podcasts?
Interesting you'd bring that up.
Funny you should ask, Blake.
Exactly. Yes, we do have a podcast called Swiss Money Secrets. You can find that wherever you listen to your podcasts. We bring out an episode about once a month, and we try to cover evergreen topics, so you can also listen to past episodes. They should still bring you a lot of value. We did one with you, Blake, about 1.5 years ago, and it's the most popular episode we ever did. So highly recommend you look into that. I also wrote a book, coincidentally with the same name, Swiss Money Secrets. If you're interested in that, reach out to me, send me an email, and I'll send you a digital copy for free. You can also find a lot of resources on our website, WHVP.ch, where we regularly live blog posts as well.
So to end where we began, yes, Americans can definitely open up a Swiss bank account. And during the Obama administration, there were a lot of Swiss banks who decided, you know what, we don't want to work with Americans based on the increased regulation pressure from the US government. But a lot of the Swiss banks said, I'm paraphrasing this, there's probably a more elegant way to say this, we bankers like money, you Americans have money. So we're actually going to change our business model to cater to working with Americans, and investment advisors like Jamie, who are based in Switzerland, come to the United States frequently. Relationships are a very big part of how Swiss bankers do business. I've heard of Swiss bankers who've turned down very wealthy clients because they did not like the individual who had the money. It's very much a relationship-based business. It's the reason that we're glad to have Jamie here in Miami so she can meet with attorneys like myself who refer business to her company, but she could also go out and meet with her clients in person. Jamie, thanks so much for coming here. It's always nice to see you here in the United States. I will definitely, once the weather gets warmer, come see you on the other side of the pond. And I hope you enjoy the rest of your time here in the States.
Thank you so much, Blake.
Let's do a handshake. And wait, we're working a fist bump. Boom.